I'm Stephanie Choo. I'm partner with Portage Ventures. We are a fintech-focused early-stage venture fund with 3 billion of AUM. We're now investing out of our third fund. I lead investing in North America for the firm, and specifically our investments in crypto and Web3 companies. I'm particularly excited about this panel because I think we're at really the beginning of a significant convergence between fintech and crypto, which I believe could have the potential to really disrupt financial services as we know it. And I'm joined today by two senior leaders in the industry in Canada and the US, Blair Wiley, who's the Chief Legal Officer at Wealthsimple, and Dante Disparte, the Chief Strategy Officer and Head of Global Policy at Circle. Welcome and thank you both for joining. Maybe I'll have both of you just introduce yourselves quickly. Blair, maybe we'll start with you.
Thanks, Steph. Excited to be here today. So I'm Chief Legal Officer at Wealthsimple. We're a leading consumer fintech company in Canada. Just shy of 2 years ago, we were the first regulated cryptocurrency trading platform authorized by securities regulators in Canada. And since then, we've grown to over $1 billion in AUA and significant numbers of clients across Canada who are trading cryptocurrency with us for the very first time. We really believe in the future of crypto and look at ways we can bring it into all aspects of our business and products that we offer to our clients.
Yeah, and hi, Steph. It's great to be here with you and to share a virtual stage with my friend Blair. So I'm Circle's Chief Strategy Officer and Head of Global Policy. And for those who don't know, Circle is the issuer of a regulated digital currency known as USDC, which is a stablecoin in crypto parlance, but effectively a dollar uploaded onto the internet and then suddenly inheriting the power of transmissibility, reduced friction, and all of the great opportunities that you have if you had programmable, composable, and exquisite internet native money. So today we have more than 50 billion in circulation of USDC and a host of amazing use cases to describe.
So crypto, I think, has really seen significant growth in the last couple of years, both on the institutional side and on the retail side. We are at a payments conference, so I think we're going to spend most of today really digging into how crypto fits into the payment space and specifically the topic of stablecoins. So total market cap of stablecoins, over 180 billion USD, total market cap of the crypto sector, 2 trillion. Stablecoins specifically have really quadrupled since the start of 2021. But just to give the audience a little bit of context, maybe can we start from the beginning? What is a stablecoin and how does it fit into the payment system? So Dante, maybe we'll start with you here.
Sure. Well, a stablecoin in some respects is solving crypto's original sin, right? Where if you go all the way back to the beginning and you look at the Satoshi Nakamoto Bitcoin white paper, the call to action in the white paper was to create a peerless or a peer-to-peer electronic money system. And that creates the advent of a blockchain ledger being put into use and being lit up, which has a lot of superpowers around solving the double spend problem in the accounting world. So there's an opportunity for digital assets to be scarce. So the Bitcoin blockchain solves for one big problem, which was the double spend and not having and having unique digital assets. However, as a payment instrument, Bitcoin had some flaws. Hyper volatility, not a ton of utility, not the type of transaction throughput that you would like to see if you were going to ever touch the retail payment system. The stablecoin originates around trying to solve the economic stability question and the buyers and spenders remorse that plagued a lot of very early cryptocurrency transactions. I think the crypto industry famously celebrates Bitcoin Pizza Day as a teachable moment of what happens when you spend something to buy pizza that the morning after may be worth $40,000 or 30. And so hyper volatility is the enemy of any type of payment systems innovation. And so a stable coin like USDC is backed by the underlying assets that we promised they're referencing, cash and US treasuries, so that now you have price parity to the dollar and you could open up all of these amazing internet native payments use cases.
Blair, anything to add to that?
No, I don't think so. I mean, I think it's often something that critics point to of a failure of Bitcoin, that it didn't realize its promise of being this internet money that could be used to buy things and be a medium of exchange. online. But I think Dante's point is bang on. We're still in a world where we think about the price of things in dollars. We want that predictability about how much things are worth and how much we're spending to pay for them. And I think stable coins are just a tremendous innovation and way to leverage the power of blockchain, the power of Bitcoin, but really integrate it more directly into the way we conduct our financial lives today.
And Wealthsimple was really the first regulated crypto trading platform in Canada. They offer some stable coins on the platform for Canadians to trade. Based on what you're seeing at Wealthsimple, where do you feel like the current adoption of stable coins are in Canada in terms of both adoption and availability, really?
Well, I mean, I think one way of looking at that question is, how people are using our platform. There's clearly an element still of people who are focused primarily on crypto as an investment asset. They're excited about the technology and the promise of various cryptocurrency projects. They want to participate in a new protocol that's been built, so they're buying tokens of a blockchain protocol, or they're buying Bitcoin or Ethereum. But as we continue to expand our product and offer wallet functionality so that people can move assets from a wallet with Wealthsimple into the DeFi ecosystem and engage in various DeFi activities, we are seeing more and more people looking to be able to buy and use stable coins like USDC, which we offer on our platform, as a way to just provide that certainty and take away the volatility and unpredictability of cryptocurrency values. So we do see a lot of excitement about people starting to actually use their Wealthsimple wallet to move cryptocurrency onto and off of DeFi applications.
Dante, you guys launched USDC in 2018. It's now the second largest stablecoin by market cap. Can you tell us a little bit about how you got here? Maybe how you guys are different than some of the other stablecoins in the market today? And then I think very specifically, I want to also touch on some of the regulatory challenges that you guys face en route.
Yeah, no, it's a great question. It's a little bit like the macro environment of the real world, right? That the dollar, for example, is the global currency of reference and currency of choice, because a good currency is the sum of all the parts. And I think the same holds true in the digital assets arena. There have been eye-watering examples of internet funny money and vaporware in Canada. Not to bring up the past, but Quadrig SCX is a teachable example of what happens in the not your keys, not your crypto category. And so the industry, fast growing in its fraught 13 years of trade, has had a host of ups and downs in a boom and bust cycle that would make high frequency traders blink. And so in order to become USDC and in order to sort of have built a very trusted, well-regulated dollar on the internet, I think there's a simple recipe, and it's hard, right? Number one, regulation first. A lot of stablecoin issuers ignored the pre-existence of money transmission or electronic money regulations. Circle did not, and we got the business license comprehensively in the United States. Second, show me the money, and don't just take my word for it, because again, if you're posting on crypto Twitter promissory statements about how good your stablecoin is, whether it's an algorithmic stablecoin or an asset-backed stablecoin, then you probably have something you're hiding, in my humble opinion. So we decided very early on, since the first USDC entered circulation until the 50 billion mark, that we need a third party. In this instance, it's Grant Thornton, to provide attestations about the sufficiency of reserves to meet the demands for USDC outstanding. That's a requirement that is not imposed on us by regulators, but it's a choice Circle took as a leader in the space to ensure that there was fundamental trust in USDC. Then you've got to build for interoperability and network effects. A lot of traditional payment systems, and this is a payments conference, labor under the walled garden problem, or they labor under proprietary tech. So if you were a PayPal user, you couldn't pay a Venmo user, despite the fact that they're owned by the same company. So Circle has also made a bet on open source public infrastructure, public blockchains. That promotes interoperability, competition. And so you see today companies like Visa, MasterCard, MoneyGram, just today Stripe made an announcement about partnerships with Circle and USDC for payments on Twitter. None of these would be possible if Circle had a closed loop technology standard that didn't promote competition. So that's where, for example, what we're doing with Wealthsimple also demonstrates the art of the possible when you're building on open technology. So I think that's the recipe for building a responsible, well-regulated stablecoin, if you had to repeat it.
And Blair, can you talk a little bit about stablecoins regulatory status in Canada today? Why do you think it should be a regulatory priority? And what do you think the risks are of more wide-scale adoption by Canadians?
Yeah, I mean, I think there's a few ways of approaching that question. It's a really good one. I think the one thing I would call out is I've sometimes heard people criticize stablecoins as being private, control of money, and I actually want to dispel that, because I think it's the opposite. As Dante suggested, it's actually putting money onto the internet using open and programmable interfaces, open source technology. In Canada today, we regulate private actors who play critical roles in our payments infrastructure. Interac, Visa, MasterCard, these are all for-profit private companies who play massive roles in moving value across financial institutions and on the behalf of customers. I think having right-sized regulation for players who issue stablecoins makes sense, just like we regulate Visa, MasterCard, and Interac. It builds more trust for Canadians. It gives more trust for merchants who might want to receive a stable coin, that the dollars they're receiving are properly backed, that the protocols are in place to prevent money laundering and financing of financial crime. So I think as we think about the power of the technology, building trust, collaboration between both regulators and private enterprise, having clear and simple standards for companies like Circle or Wealthsimple to enable stable coins makes as much sense as the way we regulate Visa, MasterCard, and Interac today for what they do in our Canadian payment system.
As we kind of extend what this technology could be, it feels really obvious that it could, in fact, completely disintermediate banks and other existing financial institutions. How do you guys feel like the traditional finance sector should be thinking about stablecoin infrastructure and crypto within payments, given obviously existing profit pools stand to lose?
Well, it is a payments conference, and since I'm not there in person, look to your left, look to your right. The person sitting next to you is being disrupted. That's one school of thought. The other school of thought, because I don't want to be declared persona non grata in Canada, and it's also my first destination if I ever need political asylum. But the other school of thought, rather than it being disruptive, and for example, at scale, my prior project, I was one of the founding executives of the Libra project. At scale, people were concerned that Libra would contest the power of the US dollar, and that crypto in a form of self-sovereign internet money would dethrone monetary sovereignty and monetary policy. I had to remind people that they had tanks and they had guns and they had an air force, right? And that monetary sovereignty ultimately is in the public interest and it's a public activity. So I offer actually a counter narrative, not one in which stablecoins or crypto assets or blockchains are substitutional to any traditional financial infrastructure, but rather we're creating optionality. And that when the lights are off, it's really great to have cash. And when the lights are on and you're in the middle of a pandemic and you're being told to quarantine at home, it's really great to have low friction, high trust internet money that you could transmit. But the idea that you're going to escape rules, I'm sure Wealthsimple can say as much as Circle can. The idea that you're going to escape rules and get very big, living on the perimeter of being well regulated on the perimeter of rules, you're not going to last very long. And so a lot of the crypto companies are seeking legitimization, and they have for 13 years now. And the companies that have been building in that rules-based, draw inside the lines kind of operating model are now the big companies to watch. And you're starting to see these types of innovations proliferate and scale. So, the White House executive order on this says as much. The policy and regulatory direction of travel says as much. And the fact that you'll soon not be able to distinguish between a bank, or a tech firm or a fintech or a crypto startup, but rather the convergence of these technologies is what's underway. I think that's a very powerful trend.
And maybe just following along a little bit on that same question, Dante, Circle announced a strategic investment from BlackRock and Fidelity. Maybe talk a little bit about, again, that balance between like what are they trying to get out of this equation given the potential disintermediation potential of the technology.
Well, in that this is an interesting irony. Again, back to, the fear for 13 years was that, crypto would disintermediate traditional banking and finance rather than creating optionality within banking and finance. Circle as a company has created a cottage industry in wholesale banking and asset management inside the United States, because the reserves backing USDC are, guess where they're held? Inside the care, custody, and control of the American regulated banking system. But that doesn't mean we don't believe fundamentally in challenging the limitations of brick and mortar banking, right? There are limitations. Your financial needs and mine do not take bank holidays, yet the banking system shuts down. You can't transmit off hours, capital markets stop working. And so things like DeFi are challengers to Wall Street, and I think they should be encouraged, but DeFi won't get big if it's on the margins. Same as stablecoins, deep challengers to the lack of payment systems optionality. But as I mentioned before, Visa, MasterCard, MoneyGram, Stripe, a lot of very traditional payments firms are turning to USDC as that kind of native dollar on the internet as a way of promoting competition and payment systems optionality. But it's very unlikely that we're going to substitute them or displace them or disrupt them. Instead, this is just becoming a part of that payment systems optionality that's very powerful.
Maybe taking the conversation in a different direction here. There's a number of different projects globally. I know the Bank of Canada is working on one right now, which is all about establishing a central bank digital currency. How do you guys feel like central bank digital currencies, which there are a number of global players experimenting with, how do you feel like those will coexist within the crypto ecosystem and with existing stablecoins?
Yeah, I mean, I think it's an interesting way to frame things, the way Dante you just did around optionality. For us, I mean, for me personally, I would say I'm intrigued by central bank digital currencies. The Bank of Canada has published some really thought-provoking white papers about CBDCs, talked about how they can actually potentially be a catalyst to get better outcomes for Canadian consumers, potentially forcing banks to pay higher rates of interest for the privilege of holding bank deposits for consumer funds. Again, reducing friction within our payment systems, providing for new technology and new ways to move money. So I think all those things are very promising. I don't, though, think that they are a perfect stand-in for the power of a stablecoin or the perfect stand-in for a power of other public blockchain technology. I think there's different use cases, different opportunities for both to add value and to improve the Canadian economy. So I don't think of it as either or. It's sure, let's study, let's investigate central bank digital currencies. Let's figure out where the benefits would lie, but let's also continue to embrace well-regulated and powerful forms of money using things like stablecoin.
And if I could, Steph, just maybe adding one tiny intervention on the question of central bank digital currencies is, I think central banks, and the Canadian Central Bank for sure is in this camp, would be well advised to not be first. And because to be first at digitizing the currency of a country at the government level ultimately implies that you're making a 100-year technology bet, that you're importing to the taxpayer a cybersecurity liability and a digital transformation liability that is otherwise, frankly, kept in the air gap of private sector innovation, and a whole host of other policy and unrelated issues to technology, such as privacy, the specter of deplatforming people from their money, and so on. And so in the debate of risks and rewards with central bank digital currencies, I'm in the camp, just like Blair, that this is not a substitution discussion, but rather, would you want the Canadian sort of aviation authority to build build jet engines and fly planes, or rather designating the rules of safe conduct in the skies. And I think the central bank digital currency conversation is a little bit distracting of the void of fast payment systems inside government backed and central banking backed pipes for moving money. But a digital currency may not necessarily be the best innovation if that's what you're trying to solve for.
And do you guys wonder, and one of my questions that I've had in the last little while is looking at the rate of change in the space. It's hard, even honestly, for an investor to keep up with, whose day job it is to actually invest in this industry. What chance do regulators have in being able to really be the quote unquote air traffic controller, to be able to set a framework to regulate this space without then also stifling the potential innovation within it? It's a really difficult line. I'm curious how you guys are in conversations with regulators pretty regularly. I'm curious what you would say to them about managing the rate of innovation and change here.
I'm happy to
Well,
start.
things are moving super fast. It's pretty hard to draw a black line and say this is okay and this is not okay, because there will be some new permutation or innovation that all of a sudden makes the rules that were designed look silly. My personal view is that we are moving so quickly that we need to establish principles for responsible innovation. There does need to be really close collaboration between industry and regulators and government. I think there needs to be more trust building. I think there's been a lot of, animosity or fear that has crept into conversations around disruptive technologies in the financial system and the impacts that can have. So I think dispelling those fears and myths is really important. And I think government's taking a much more proactive role in partnering with the good actors in the private sector who, like Circle, are getting licensed, who are in regular communication with officials about what they're building and why. What they're seeing is super important, maybe more important than it ever has been before. There's always going to be this fringe element of sort of sketchy characters and bad actors. We want to find ways to amplify the impact of the good actors so that we don't kind of let the fringe kind of dominate the conversation and dominate the policy agenda.
Yeah, and what I would add is it's, I think, very similar broad message, but I would also add a little bit of a challenge to regulators who are paying attention, right? Number one, the highest order set of principles that regulators talk about in financial services is this idea of risk-based, activity-based, technology-neutral regulation. And I do think, unfortunately, it may very well be the crypto industry's brand problem. The second you say crypto and you say blockchain or you say digital assets, the immediate presumption is risk. And so as a result, we are neither risk-based nor tech neutral in the way we're applying rules and regulations. And frankly, the worst thing I think we could do, and this is a little bit of the tendency in the United States, is to hand over this entire sector to banks. Because as last I checked, the last time we dislocated trillions of dollars in the global economy was at the failure of banks not performing and being opaque and being heavily laden with risk. And that underwriting that was a social loss, right? So you privatize gain and socialize losses to trillions. And so the banking system does need challengers, but the challengers don't need to present themselves as substitutes for good money or substitutes for rules.
I think what I would maybe add there, Dante, is I think in Canada, we sometimes have this warm and fuzzy feeling about how Canada prevailed and did better through the financial crisis than the United States. And I think that there's many things to be proud of as Canadians, that we did have a more resilient financial system and didn't take on some of the same risks as the US. But we also had our entire asset-backed commercial paper market freeze up and lock up billions of dollars. We still had government backstop of our financial institutions in Canada. And more importantly, I think we can't just rest on our laurels of how we maybe fared once, almost 15 years ago. And I think we also need to like assess where the world is today and where it's rapidly accelerating towards. And focusing primarily on risk and keeping things the way they are itself is a significant risk because the world is changing and evolving really quickly. We will be left behind. We will not be competitive. In a global economy, we will struggle to keep up if we focus too much on preserving the way things are and not embracing innovation, experimentation, new technologies to deliver financial services through more efficient and powerful means.
I'd love to actually spend a little bit of time talking about specific use cases that you guys have seen stablecoins have enabled, because I think one of the key criticisms of crypto in general is that it's a great technology. It has transformative potential, very obviously, but there are very few people actually using it to solve real problems today. And I'd love to have a bit of a discussion for the audience here who may not be as familiar with the specific use cases of how people are really using crypto and stable coins either day to day or to solve problems or to replace financial infrastructure today.
Yeah, no. So I'm happy to start there because it is, to your point, it's sort of if you won the postal code lottery and you by birthright were well banked because of being Canadian, then it is very hard for traditionalists and perhaps for payments conferences to see, well, what is the benefit that these innovations are solving for, just as like a general matter. So suspending a bit of disbelief, imagine a world in which, the sum of the $2 trillion and some change digital asset activities are actually propped up by stablecoins. Here in the United States, very recently, our acting controller of the currency, which is our banking regulator, gave, I think, a really, really important speech in which he described the digital assets economy and its economic pyramid and said, if this $2 trillion digital assets domain and what I like to call internet native capital markets or decentralized finance, if it is to continue working, it needs a common pricing instrument for settlement of any other crypto transaction. And the stablecoin is that base layer. So that's like the bootstrap use case for stablecoins. It also happens to be an incredibly exacting space in terms of settlement finality and price discovery and performance requirements. It's a multi-trillion dollar set of economic activity taking place on chain. Then you break free into all of the other examples that I described: Visa, MasterCard, MoneyGram opening up stablecoin powered fiat on and off ramps and cross-border payments. None of those are happening from altruism. They're happening because I think a lot of these very big traditional companies can see the writing on the wall that the way we move money has not had a systems upgrade in over 50 years. SWIFT is antiquated, ACH is antiquated, enshrining money on plastic cards is antiquated, physical checks are antiquated, and that the to always on internet natives need a stablecoin as one of the. We're starting to see breakthrough innovations in real world payments and a whole host of other applications.
I think one thing we think about a lot is we're increasingly in a 24/7 business. Well, we are in a 24/7 business model. We have people who can log on at 3 a.m. and buy and sell Bitcoin on our platform. People are increasingly interested in trading securities on weekends and overnight. We have a payments product now where people are out spending money on their Wealthsimple card. And how we manage like settlement between our various financial systems, our financial partners, is really important. And if you let kind of the banking hours of our traditional payment system today dictate when you can move money to manage counterparty risk, I think you actually create a lot of additional risk in the economy. So, one simple example that we think about within Wealthsimple is, okay, we have clients who are buying and selling digital assets. We route those orders to various executing brokers, and we route settled transactions to our third-party custodians to keep our clients' assets safe. How we manage money flows between our custodian and our executing brokers and ourselves in a 24/7 trading environment requires 24/7 money movement, which we do not have today. So stablecoins are like a simple and powerful way to actually reduce our counterparty risk and make things more efficient and effective. And I appreciate that there are various projects underway in Canada to make money movement more real time, more final, more 24/7. But those projects are going to take their time. They're built on walled garden legacy technology, and things are moving really quickly. We need a really open and programmable interface for money movement to keep pace with the expectations of our clients.
Yeah, I also feel like the point that you guys have made is if you're sitting in the seat in Canada and the US, it's really easy to have a solvent banking system. It feels like a lot of the best specific on the ground use cases of both stablecoins and crypto in general are going to start with emerging markets use cases where people maybe aren't quite as lucky to have the banking system that we have today. But one other question that I wanted to dig in on before we end here is really some of the risks of the stablecoin world. I think one of the criticisms that I've certainly heard is that we've now moved, as the growth of stablecoins within certain ecosystems goes, we've now moved volume and there's now some systemic risk in having really what are private entities like Circle control big parts of the global financial ecosystem. How do you think about that centralization risk almost?
Well, well, trust me, no project, probably more so than my prior one, garnered that exact fear that you described. Are you inventing money, or does money remain sort of a matter of public authority? The key is companies that are well regulated, like Wealthsimple, like Circle, and others, respect conformity to living inside the rules-based system. At $50 billion today, USDC, I think, is vis-a-vis the size of the global economy, a rounding error. But an important part of that lack of optionality in payment systems and candidly a critical part of introducing competition for central bank digital currencies. For example, the ECNY project in China has 250 million users. It was just debuted at the Winter Olympics. And so if you care about keeping a degree of rules, value systems, and free market competition ingrained in the movement of money in the age of the internet, then I think it's in the broader interest of economic competitiveness and sort of the ability to scale these innovations up, that they live within a certain set of rules, but that there are also challengers in the right ways around what those rules are sort of precluding people from doing. Because to your point, Steph, there's a 1.7 billion people who have no access to the banking system. And if to be banked is only hinged on brick and mortar, we have a lot of trouble on the planet. And so I don't think any of us should rest until we have ways of scaling up internet native payments and internet native forms of finance where all other existing methods have reached their point of diminishing returns. These innovations are really, really important.
Yeah, I totally agree. I think realistically, we probably rely far more on Visa or MasterCard as like a critical element of money movement globally than we do Circle or any other stable coin. So I think there's a realistic way of looking at this where we're actually reducing risk. We're able to actually break up some of the existing massive companies that have incredible outsized influence in how wealth moves globally, and instead make this much more of an open source internet protocol for all sorts of different actors to participate and add value.
And I want to end with maybe a future oriented question here, which is if you guys look out kind of 5 years or maybe 10 years out, what are you most excited about in crypto within the stablecoin ecosystem?
Yeah.
Dante, maybe we'll start with you.
Thank you. It's a great question. So the point in time I'm most looking forward to, and I have a piece in Forbes that I wrote about this some years ago, is that when was the last time any of us went to an internet conference and spoke about hardware and software? And so I'll be really, really gratified when we hit a point in time where the technology fades to the background and Wealthsimple, for example, does not have to explain itself for why it is trying to support always on digital assets as a part of a well-regulated business, given the lack of consumer choice, given the existing ways in which we provide finance and banking to people. And so I'm optimistic that within a 5-year period from today, the tech will fade to the background. And we won't have to describe what is blockchain, does it cause climate change, is it causing ransomware, is it bad for this and that and the other, but rather the use of public financial markets infrastructure is just normal, like it is that no one is fully understanding how this conference is being recorded today at the technological level, but really beneficial. It's beneficial to the participants that it was recorded in the first place. When instant global payments can be executed to trusted counterparties at speed and at the scale of the internet, job done. But I think those two things are going to be really important trends over the next several years, is the tech fades to the background and then the magic happens.
Yeah. Yeah, I like that. I like that answer a lot, Dante. We don't study the internet in the way that we now are talking about crypto and blockchain. I think, building on that, I'm also excited to get to a point where we start to use this technology more frequently and stop asking this question of like, well, what's the use case? What's Bitcoin even good for? And I think if you compare it to social media, when Facebook first came on the scene, no one really understood what it would do and what problem it was trying to solve, and it created an entirely new paradigm for interaction on the internet and building communities with both pros and cons. But I hope that we can soon get to the point that we're actually just using the power of this technology to do entirely new things that no one's even thought of yet, that actually make the world better, more inclusive, more economically empowering for disadvantaged people, and stop thinking about trying to solve a problem we have today using crypto, and instead focus on value creation tomorrow with the underlying technology.
Who do you think is going to adopt first? Is it going to be retail or institutional that gets us there? Institutional is obviously the larger, it obviously has scale, but retail is clearly the faster adopting segment.
I mean, I'm happy to provide a quick comment to this. I would say the genie's out of the bottle, and 200 million people and counting have taken the long bet that digital assets are here to stay, and they voted with their feet and they voted with their digital wallets, and that trend line is only increasing. Companies do not take out Super Bowl ads. If you think about the more memorable ones that were aired in this round of the Super Bowl, for fads. There maybe some of those companies are the MySpace to a Facebook and so on, and that there will be predecessors and successors coming. But I do think this technology is here to stay, and I think the $2 trillion digital assets economy is only in its opening innings. And so, what's also interesting to your point about institutional adoption, think about the firms that have recently invested in Circle, BlackRock, Fidelity. We've announced a major partnership with Bank of New York Mellon. These are household name institutional firms. And so soon the boundary between traditional banking and fintechs will be completely blurred, perhaps even indistinguishable. And crypto and open digital wallets and open blockchains will just power a different type of banking service, perhaps even through those types of companies.
All right. Thank you so much to both of you for participating in today's panel. I think we gave the audience, I hope, a lot to chew on in terms of where we're going in payments, in stablecoins, and in crypto for the future. And thank you to the organizers of the summit for having us on today. Appreciate everybody's time.
Thank you, Steph.
Thanks all. Thanks, Steph. Thanks, Dante.